It's all bullish for Bitcoin, and it's going to drive the price of Bitcoin up. And the thing that makes our company a monster is having multiple ATMs in multiple capital markets, all of them correlated to different forecasts, like your forecast of interest rates, your forecast of Bitcoin volatility, your forecast of Bitcoin itself, your forecast of crypto policy. And we're able to either buy or sell or hedge any of them in real time, 1 million, 10 million, 100 million, or 1 billion. When someone irrationally misprices something, then if it's mispriced too low, we buy it. If BlackRock holds 3% or 2% of the Bitcoin, or if Strategy holds 2 or 3 or 4 or 5% of the Bitcoin, it doesn't matter, because the price of Bitcoin went from 10,000 to 100,000 while we were pursuing that 2%. And that meant that all of the work that we've done to get to 2.5% resulted in like a $23 billion gain for us, 23 billion. But it resulted in a $2.2 trillion gain for everybody else.
Bitcoin is still in the early stages of a much larger price surge, and those who move early stand to gain what latecomers can only dream of. That's according to Michael Saylor, executive chairman of MicroStrategy, who made one of his boldest forecasts yet at Bitcoin 2025. Saylor explained why he believes this cycle could go down in history, with Bitcoin entering its most explosive growth phase since its inception. He pointed to a massive surge in demand, noting that thousands of U.S. companies are now investing, while institutional interest continues to grow rapidly. Even sovereign wealth funds, large enterprises, and governments are beginning to view Bitcoin not as a speculative asset, but as a strategic reserve. This fundamental shift, Saylor argues, will transform corporate balance sheets and usher in a new era of adoption on a global scale. This is how you buy and sell crypto the easy way, using eToro, one of the world's leading trading platforms. If you're new to crypto, eToro makes it super simple. Let me show you how I bought Solana in just a few taps. First, head to the search bar and type in Solana. Tap on it, then hit trade. I'm going to invest $10, that's the minimum. Now just hit buy and done. I now own Solana. Selling is just as easy. Go to portfolio, tap your Solana asset, then click close and confirm your sale. Super simple. That's how quick and beginner-friendly eToro is. But here's why I use eToro. Earn up to 4.3% interest on non-invested funds, 0% commission on stocks, and you can set up an account in just minutes if you want to start your crypto journey. Use my link in the description to sign up to eToro today and start trading.
Bitcoin is the first commodity in the history of the world that outperforms the S&P index on a consistent basis. So if you are a public company, it's a very simple choice. There's one best asset, and there is no second best asset. Bitcoin works for a public company because it's higher performance than the S&P, and it's more volatile than the S&P, and it's a commodity, and so you can go to 100% leverage. And every mathematical model you can possibly work through indicates that the right answer is 100% Bitcoin. If you diversify that, all you're doing is bleeding off, diluting the volatility, which devalues the options. So you're going to destroy your own options market. And if you dilute the Bitcoin with anything else, you would destroy your performance. And so the first order answer is it makes no sense because the options are destroyed and the equity is destroyed. The second order answer is you can't build a Bitcoin-backed convertible bond or Bitcoin-backed convertible preferred stock or Bitcoin-backed fixed income preferred stock if you're not Bitcoin-backed, right? And so if Berkshire Hathaway, for example, were to buy $100 billion worth of Bitcoin tomorrow, they might have more Bitcoin than us, but they couldn't issue equity and credit instruments that have Bitcoin's performance because they would be diversified. And so at the end of the day, it makes sense for us to be 100% Bitcoin because it gives you the first order best result, and then all of the securities that we build inherit the volatility and the performance of Bitcoin. And and we would, in essence, be destroying, we're crippling our own securities and crippling our own performance to diversify. I think we live in a world of abundance, and there are more messages and there's more entertainment. You can sit and you can watch Magnus Carlsen chess videos, and you can almost watch an infinite number of commentators commenting on the same chess game by Magnus Carlsen if you want to go down that rabbit hole. We have $64 billion of Bitcoin. If the stock were to trade to $1 tomorrow, well, we wouldn't sell the equity, duh. We would just sell the preferred stock. We would be selling stock over collateralized 10 to 1 against Bitcoin with a 10% yield, and we would generate billions of dollars of gains selling the preferred or the fixed income instrument. At some point, people would say, wow, they're generating gains anyway, and then the value would come back into the equity. Or we would sell, you sell a preferred stock. If someone's stupid enough to short my stock to $1, I would sell $1 billion of the preferred and I would buy back the common stock, right? And I would just recapitalize the company, right? And then the common stock would fly through the roof, and then they would be complaining that we bought the thing that they were selling. So operating companies can do this. Trust companies, trust funds, ETFs, they can't do this. A closed-in trust can't do what I described. So the way that I see the world and the way that we see the world is when someone irrationally misprices something, then if it's mispriced too low, we buy it. And if it's priced at a massive premium, we might sell it, not to drive the price down, but just to capture the premium. And we construct all the preferred so that I sell this preferred that people want US dollar yield. I sell this preferred to people that want convertible. I sell this preferred to people that want Japanese yield. I'll sell this thing to someone that might want a euro yield. I will create this for people that want leverage. And so we're creating optionality into the credit market. Like someone else will say, well, I think the S&P is going to start to provide a credit rating for Bitcoin companies like MSTR. And then the price of those things will readjust, and there'll be a huge surge of demand, and we will, if we have an ATM, when that surge of demand comes, we can sell $10 billion in a week. If we don't have an ATM and that surge of demand comes, we sell nothing in a week, and we talk to some bankers for 4 weeks, and then by the time we do something, the opportunity is lost.
As BlackRock and other financial powerhouses quietly accumulate crypto, Michael Saylor predicts the market is gearing up for a massive breakout by the end of 2025. According to him, we could see over 1.1 billion active crypto wallets by then, a pace of adoption unlike anything in financial history. Saylor believes this will mark the fastest creation of wealth the world has ever witnessed. After years of research and data analysis, his conclusion is simple: liquidity drives everything. And in the next cycle, he says, crypto will outperform every other asset class on the planet.
So the thing that makes our company a monster is having multiple ATMs in multiple capital markets, all of them correlated to different forecasts, like your forecast of interest rates, your forecast of Bitcoin volatility, your forecast of Bitcoin itself, your forecast of crypto policy. All of those futures are changing all the time. We're straddling that future, and we're able to either buy or sell or hedge any of them in real time, 1 million, 10 million, 100 million, or 1 billion, right? And sometimes you do nothing for you could do nothing for a month or 2 months, and then you could do $2 billion in 2 hours, right? So, and maybe you'll do something, consistently, but we built the business to straddle the crypto economy and the traditional finance economy, and to monetize volatility, and we're pretty thoughtful about how we do it. So if you look at Bitcoin today, Bitcoin's digital gold, it's digital cash. What does it mean? It's a bearer instrument, a monetary instrument. What do I think is going to happen? I think it's going to keep growing from 1 trillion to 10 trillion to 100 trillion. It's going to keep getting bigger and bigger in the capital stack. And I think other forms of money, fiat currencies, will continue. You're going to have sovereign debt, corporate debt, other type municipal debt. As long as you have cities, they'll issue debt. As long as you have countries, they'll issue debt. As long as you have companies, they'll issue debt. As long as you have families and they want to buy a house, they'll issue debt, mortgage-backed debt. You're going to have all these forms of credit when people cash settle. The settlement network will be Bitcoin. Was the world built on a gold standard in the 19th century? Yes, gold. But what circulated? Sovereign debt. Will the world be on a Bitcoin standard in the 21st century? Yes. What will circulate? Every form of credit of every credit-worthy counterparty, and then on top of that, equity, layers of equity from public company, private equity, and you'll have all sorts of other collectibles. I don't see a world where that disappears. I don't see a world where it needs to disappear. And so I see a world where there are many types of assets, but the king apex asset, the root asset, which everything else is settled on, or everything else is oriented to, the center of gravity of the financial universe of the 21st century emerging is Bitcoin. If BlackRock holds 3% or 2% of the Bitcoin, or if Strategy holds 2 or 3 or 4 or 5% of the Bitcoin, it doesn't matter, because the price of Bitcoin went from 10,000 to 100,000 while we were pursuing that 2%. And that meant that while we pursued that, by the way, technically, if you go to Saylor Tracker, you will find that all of the work that we've done to get to 2.5% resulted in like a $23 billion gain for us, $23 billion. But it resulted in a $2.2 trillion gain for everybody else.
Michael Saylor is sounding the alarm on traditional finance, arguing that key metrics like inflation rates and employment data are often manipulated to fit a narrative. In his view, these figures don't reflect the true state of the economy, they reflect what governments want the public to believe. That's where Bitcoin comes in. Unlike traditional assets, Bitcoin operates outside the system. It can't be manipulated, edited, or controlled by policymakers, and that, Saylor says, is its greatest strength. He believes the next major wave of adoption won't be driven by retail investors, but by corporate giants like Apple, Amazon, and Google. With strong connections to Wall Street and institutional finance, these companies will use spot ETFs to rapidly accumulate Bitcoin, bypassing the slower, more complex paths available to everyday investors. According to Saylor, this next accumulation phase is already in motion, quiet, efficient, and on a massive scale. The financial system is evolving, and Bitcoin is becoming its foundation. Those who grasp this shift early will have a rare opportunity to build generational wealth before the rest of the world catches on.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.